Peter Eliades here with you again for Stock Market Cycles Update. This is Tuesday, September 10th. And again, I can't emphasize how important I think these few days have been and will be over particularly the next 24 to 48 hours. We gave you an inkling over the past few days as to why it's important. We're going to begin again with this daily advanced decline line chart. And I don't know if you can notice at the very end of the chart here how clear your TV is. The YouTube presentations really present themselves with great clarity, especially if you have a big screen TV, which is where I watch a lot of mine on. But if you'll notice, in terms of what happened today, yes, indeed, we did get a little bit above this upper channel of the daily advanced decline line. We're going to show you the second chart that we developed, so that one's easier to zoom in on, so you can get an idea as to what is going on with that particular chart. And this one, we can first of all spread it out a little bit and then zoom in on it. Let's show you what's happening. There are three lines here. The green line is the upper channel, an 8-year channel that goes back to a low in 2011. The red line is simply a trend line, a tops line, from the July 1st, 2014 high through the January of 2018 high, which went also a tiny bit above the upper channel. And the third line is just a very short-term line that we added it today, actually, taking a look at the latest market action. As you can see, there was a high on July 3rd, another high on July 12th. This one a little bit above it, but I used the three tops here that fall exactly on the line to draw another trend line, and that one is the short-term trend for the tops that we got up to today. So I told you yesterday that I would be troubled if we got above this red line, and indeed we did that today. But the short-term rules sometimes in terms of what happens with the very short-term trend lines. So the fact that we get up to this trend line today is not bothersome. But this is the end of the line, folks, for many reasons. If this market takes off from here, and I'm not saying that's impossible, if we start breaking up to the upside from here, then we have something completely different going on in the market, and probably the blow-off that a lot of people have talked about. I don't think that's going to happen, but you have to be flexible in the market, and if we break through here, then the odds increase significantly that something like that is going to happen. So I wanted to show you an update on the advanced decline line. This could very well be an important top here on the AD line. It's something we're going to watch very closely. Okay, in terms of our cycle projection work, this chart shows you why we are in such critical territory right now. This is the closing price of the New York Composite Index today. And we told you yesterday and the market day before that we're coming into a time zone right here where we have a preliminary upside projection, but it needs to be confirmed in order to give it confidence. And that has not happened as yet. Any kind of sideways to up day tomorrow would confirm that projection. Here is where tomorrow's bar would lie in terms of spacing. So as you can see, a sideways move would take us above this second bar right here. Let's take a look at the same offset lines with different indexes and see what we're looking at. This is the Dow Jones Industrial Average, and look at this. Actually, as you can see, there was a slight penetration above that line today. So on a technical basis, if we were just looking at the DJIA, we would say that an upside projection has been given and confirmed, and that's the way the Dow looks right now. A lot of times what happens with these projections, if they're not going to be confirmed, they use this second line as a resistance line, and they start coming down at the same rate of change as this line is. Now, if that were to be the case, then we're talking about a very substantial decline tomorrow, if indeed something like that happens, because this line tomorrow will be around 26,600. So that implies at least a 300-point decline in the Dow if it's going to follow the line to the downside. There are no assurances that that is going to happen. So that's what the DJIA looks like. Let's take a look at the S&P. Here is the S&P 500, and you don't get much closer than this, folks. Look at the line. We'll zoom in on this for you. This is where the S&P closed today. This is the offset line. Any move above this offset line would confirm higher nominal 10-week projections on the S&P. And as we showed you with the other two indexes we showed you, the New York Composite and the Dow Jones Industrial Average, on those also. So that's how important we are. Now, in order not to get above this line tomorrow, the S&P would have to close probably around the 29.51 level. So we're talking about a significant decline would be needed in order to avoid giving significantly higher projections. And that's where we stand, and that's why we're in such important territory right here and now. These updates are being done to show off our new price projection software. And as we've told you several times over the past few weeks, that's 95% of what we're going to be doing. But there are times when the technicals become important. And as we mentioned recently, this is one of those times. So what we want to show you something else that's going on today. One of the things we do in our cycle analysis is we like to check patterns. George Lindsay called them bottom to top. So when we believe that we could be close to some kind of market top, we always check for a bottom to top count. And what Lindsay said is several times, when you're looking at two previous bottoms in the market, and we have those marked out for you right here. This is the bottom in April of 17, and this is the bottom in late June of 18. They're equally spaced here, and the time between them in terms of market days is 301 market days. If you go forward another 301 market days, that takes you to today's date, September 10th of 2019. So that's one thing to keep in mind. These patterns, we're going to show you two or three of them here because we believe that gives us more confidence that we're at a potentially important juncture here. The patterns are basically the same on the DJIA and the S&P. That same pattern of bottom to potential top exists. So we're going to show you another one now. This is simply a turning point pattern. If you look at the red vertical lines, they are spaced exactly. If I click on the line, you'll see it here, 387 trading days apart. So there's not necessarily, in fact, there's not a bottom to top count here, simply trading or turning points. If you'll notice, this turning point here would have been at the end of February in 2018. Pretty important high. We rallied strongly up to it, didn't get above that high in February until 6 months later. So that was an important high. Another important high here on August 11th of 16. That high held for the next 2 or 3 months. So that was a fairly important high. And a bottom that occurred here in January of 2015. So these turning points are the same number of days apart, and that also potentially saw a resolution today. So those are two turning point patterns. Now we're going to show you probably the best one of all. Okay, this is a fun one. This is a really long pattern, bottom to top, but they're two very important bottoms. What you're looking at now is a daily chart of the New York Composite Index. It's a closing price chart. And this is the first bottom that we're going to use to measure. It occurred in September of 1998. Remember that. That looks like September 1st, I believe, was the date. And if we go forward from there to the bottom, obviously very important bottom, in March believe it was March 9th of 2009. There it is there. The number of days between those 2 points, the number of trading days, 2,644. Now look at this. You can see that that was a very important market bottom on the daily chart, and the prior one was a very important bottom on the daily market chart. If we go forward the equal number of days into the future, lo and behold, here we are. So these things don't work all the time, obviously, but when you're suspicious of having some kind of market top and you find a pattern like this, it adds to your confidence that that may indeed be happening. So let's sum this picture up now. We showed you the advanced decline line channel and a couple of trend lines which indicate this may well be an important top on the advanced decline line. Should we break above that with any kind of big move, let's say 4, 5, 600 units, 1,000 units above it, 2,000 units above it, that would have to look like a breakout. That would have to look like the kind of market that perhaps wants to go significantly higher. That's point number one. Point number two is we are so very close to giving higher projections. They have not been confirmed as yet, and in order to avoid confirming them, we have to get a significant decline beginning here and beginning now. So that's the second thing to watch. The third thing we showed you were these patterns. The bottom to top was the last one, but just turning point patterns that we showed you that gave us at least a little further confidence that we may indeed be at a turning point. Those are the technicals and the cycles as we see them right now through today, Tuesday, September 10th. I would urge you again, please, if you haven't yet done it, subscribe. Go to the bottom right of your screen, click on the little red banner there and subscribe. Tell all your friends. These are free updates right now because we're trying to promote our cycle software, which will be coming out hopefully within the next couple of months. So that's it for now. Thank you for watching. We'll talk to you again tomorrow.